D.E. Shaw, India, Campus Interview Preparation. Welcome back to the channel. Today we're diving into one of the most important preparation guides for D.E. Shaw, India campus and off-campus interviews. These may be expected questions, which are gathered using web search and our personal database. So you can use this as a preparation material. But our suggestion is to go with other topics as well from our channel playlist. You can check timestamps in the description for the questions and jump to any particular one you want. Let's begin. Odd. How would you explain the valuation of a complex financial instrument such as a convertible bond used in D.E. Shaw trading strategies? Sample answer. I begin by breaking down a convertible bond into its two components, the straight bond value and the embedded equity option. I discount expected cash flows for the bond portion and use an option pricing model like Black-Scholes or binomial methods for the equity component. Then I add the two values, adjusting for credit spreads, volatility, and liquidity differences. Convertible instruments require careful modeling because small changes in assumptions can shift valuations significantly. While answering the above question, one should always include points like separating components, testing assumptions, and validating option pricing inputs. End. What steps would you take to identify errors in a large dataset used for quantitative research at D.E. Shaw? Sample answer. I start with data profiling, checking for duplicates, missing values, extreme outliers, and format mismatches. Then I reconcile sample entries with trusted external sources. I run distribution checks to see whether values behave as a normal dataset should. For time series data, I'll look for breaks, stale prices, and unexpected jumps. Clean data drives D.E. Shaw's models, so validation is crucial. While answering the above question, one should always include points like profiling the dataset, reconciling samples, and testing distribution anomalies. Scenario. A pricing model generates inconsistent outputs for similar securities. How would you investigate the cause? Sample answer. I analyze the input sets for each security to check whether the model used different volatility, credit spread, or yield curve assumptions. Then, I check whether any transformation logic or data mapping was applied incorrectly. If the model code is accessible, I debug the calculation steps to identify where divergence begins. Consistency issues usually stem from data inputs. While answering the above question, one should always include points like comparing inputs, reviewing mapping logic, and debugging model calculations. How do you evaluate internal controls in a high-frequency automated trading environment like D.E. Shaw? Sample answer. I begin by understanding trade flow, from order generation to execution and settlement. I verify pre-trade risk checks, automated limit controls, and exception alerts. I evaluate segregation of duties between strategy developers and trade operators. I also review system-level logs, access rights, and change management. In high-frequency environments, one weak control can create disproportionate risk. While answering the above question, one should always include points like reviewing trade flow, checking automated limits, and analyzing system logs. What procedures would you follow to validate P&L attribution for a multi-asset trading portfolio? Sample answer. I decompose the daily P&L into factors such as price movement, FX effect, interest rate changes, and position changes. I reconcile trader-reported P&L with independent valuation models. Any unexplained P&L must be isolated and investigated. Strong attribution ensures portfolio risk is well understood. While answering the above question, one should always include points like decomposing P&L, reconciling with independent models, and investigating unexplained movements. Scenario. A trader challenges your valuation of an exotic structured note. How do you verify your calculation? Sample answer. I review the model assumptions, especially volatility, payoff function, discount factors, and optionality features. I reprice the instrument using an alternate method if available. I compare inputs with market sources like Bloomberg. If differences persist, I escalate with a documented valuation memo. While answering the above question, one should always include points like validating inputs, using alternative models, and documenting differences. How do you assess model risk when working with machine learning trading models at D.E. Shaw? Sample answer. I evaluate how the model was trained, the amount of data, the quality of features, and the risk of overfitting. I test robustness by using out-of-sample periods and perform stress tests to see whether predictions hold under market volatility. I examine interpretability controls to ensure transparency. Model risk increases as complexity grows. While answering the above question, one should always include points like checking training quality, testing robustness, and evaluating interpretability. What steps will you take to reconcile differences between front office and back office valuation systems? Sample answer. I compare valuation methodologies and ensure both systems use the same market data, curves, spreads, and volatilities. I test sample trades to trace where the difference arises, whether in pricing logic or data timing. Differences are often caused by stale inputs or inconsistent model versions. While answering the above question, one should always include points like comparing methodologies, checking data alignment, and tracing trade-level differences. Scenario: you notice intraday P&L swings with no trade activity. What analysis would you perform? Sample answer. I first check whether market data feeds changed during the day. Then I examine overnight funding adjustments, FX fluctuations, or changes in valuation parameters. If swings persist, I review risk sensitivities to identify which factor is driving volatility. Unexpected P&L always requires deep root cause analysis. While answering the above question, one should always include points like analyzing market data, checking valuation parameters, and linking movements to sensitivities. How do you validate the quality and reliability of market data feeds used in pricing models? Sample answer. I compare feed prices with alternate sources and test consistency across timestamps. I check for stale prices, missing values, or abnormal jumps. For derived market data like vol surfaces, I validate shape smoothness and logical relationships. Faulty data causes faulty valuations. While answering the above question, one should always include points like cross-checking sources, checking time consistency, and validating surfaces. What checks do you perform to ensure compliance with global investment and market regulations? Sample answer. I review trade restrictions, position limits, and market conduct rules. I validate compliance with regulations like SEC, CFTC, MiFID, and local exchange rules. I evaluate whether surveillance systems detect unusual patterns. For an investment firm, regulatory breaches are unacceptable. While answering the above question, one should always include points like checking limits, reviewing rules, and testing surveillance. Scenario: a key data source becomes unavailable right before reporting. How do you manage deadlines? Sample answer. I switch to validated secondary sources and document the alternative method. I check whether differences between sources are material. I notify senior stakeholders immediately and ensure temporary procedures do not compromise accuracy. Continuity planning is essential in data-driven roles. While answering the above question, one should always include points like using backup sources, documenting method changes, and communicating early. How do you evaluate the economic rationale behind a new algorithmic trading strategy? Sample answer. I analyze the signal logic and check whether it reflects a real market inefficiency. I study historical performance and factor exposures. I evaluate transaction costs, slippage, and risk-return characteristics. A strategy must be statistically sound and economically meaningful. While answering the above question, one should always include points like validating signal logic, analyzing costs, and checking risk-return/end. What procedures would you follow to review performance metrics of quantitative models? Sample answer. I examine metrics like Sharpe ratio, drawdown, hit rate, turnover, and alpha stability. I test whether performance persists across subperiods and different market regimes. I also analyze capacity constraints. Good models are consistent, not just lucky. While answering the above question, one should always include points like reviewing performance ratios, testing persistence, and analyzing capacity. Scenario. Backtesting results look unrealistically strong. What red flags would you investigate? Sample answer. I check for overfitting, look-ahead bias, survivorship bias, and incorrect data cleaning. I rerun the test using out-of-sample periods and more conservative assumptions. Unrealistic results usually indicate modeling flaws. While answering the above question, one should always include points like testing for biases, rerunning backtests, and challenging assumptions. How do you analyze risk exposure for a portfolio with derivatives, equities, and fixed income positions? Sample answer. I compute Greeks for derivatives, delta, gamma, vega, and rho. I analyze duration and convexity for fixed income and beta exposure for equities. I consolidate exposures to understand cross-asset correlations. Comprehensive risk measurement supports better hedging. While answering the above question, one should always include points like evaluating Greeks, measuring duration and beta, and consolidating exposures. What steps do you take to validate hedge effectiveness in a multi-currency investment setup? Sample answer. I compare hedge ratios with underlying exposures and review FX forward pricing. I test whether hedges reduce volatility over time by running historical simulations. I also analyze basis risk. Effective hedging must track exposures closely. While answering the above question, one should always include points like testing hedge ratios, evaluating volatility reduction, and assessing basis risk. Scenario. You detect inconsistencies in VAR reports. How do you troubleshoot? Sample answer. I check whether the VAR model used correct risk factors and updated market data. I validate position files and ensure mapping rules match the risk engine. I rerun the calculation for a test date to isolate discrepancies. VAR issues often trace back to data inputs. While answering the above question, one should always include points like checking data feeds, reviewing mappings, and rerunning calculations. How do you assess operational risks in automated trade execution systems? Sample answer. I evaluate order routing logic, fail-safe automation, and exception alerts. I check system downtime history and backup procedures. I test that alerts trigger correctly when abnormal patterns arise. Operational risk is high when speed is high. While answering the above question, one should always include points like validating routing logic, checking fail-safes, and testing alerts. What procedures would you follow to test scenario analysis and stress testing outputs? Sample answer. I review the assumptions behind each scenario, such as shock sizes, correlations, and liquidity constraints. I check whether the model applies shocks consistently across positions. I compare stress results with historical worst-case events. Stress tests must reflect plausible but severe conditions. While answering the above question, one should always include points like reviewing assumptions, validating consistency, and comparing with historical stress periods. Scenario. A model update leads to sharply different outputs. How would you verify correctness? Sample answer. I begin by comparing old and new model versions line by line to identify which assumptions or parameters changed. Then, I validate whether the updated model uses the right market data, calibration inputs, and coding logic. I run benchmark trades through both versions to isolate where divergence begins. If results still look abnormal, I escalate to the modeling team with a documented analysis. While answering the above question, one should always include points like comparing versions, testing benchmark trades, and validating parameter changes. Point. How do you ensure accurate financial reporting in a high-volume global trading environment like D.E. Shaw? Sample answer. I review automated reconciliations between trading systems, settlement systems, and the general ledger. I test valuation cutoffs, FX translations, and daily P&L checks. I verify whether exceptions are resolved timely. Large trading volumes require strong controls and daily discipline. While answering the above question, one should always include points like performing reconciliations, validating valuation timing, and reviewing exception handling. What steps do you take to review transfer pricing between global entities in an investment firm? Sample answer. I understand intercompany service arrangements and validate whether charges align with arm's length principles. I check allocation keys, documentation, and consistency across regions. For investment firms, transfer pricing must reflect economic substance across research, trading, and support functions. While answering the above question, one should always include points like reviewing allocation logic, checking documentation, and validating arm's length rationale. Scenario. You detect misclassified expenses on a trading desk. What is your next step? Sample answer. I review the supporting documents and confirm whether the expense relates to trading activity or another department. I reclassify entries in discussion with finance teams and then analyze whether the misclassification was accidental or systematic. If patterns recur, I escalate. While answering the above question, one should always include points like verifying support, correcting classification, and evaluating pattern-based risk. How do you validate the assumptions and inputs used in valuation models? Sample answer. I compare model inputs such as volatilities, spreads, and yield curves with independent market sources. I challenge assumptions that are subjective or stale. For complex models, I review calibration methods and perform sensitivity analysis to see how outputs shift with small changes. While answering the above question, one should always include points like benchmarking inputs, testing sensitivity, and reviewing calibration logic. What procedures do you follow to analyze performance attribution across portfolios? Sample answer. I break returns into alpha, beta, factor exposures, and trading costs. I compare results with benchmarks and peer portfolios. I verify that attribution aligns with market movements and strategy intent. Attribution highlights where true value is created. While answering the above question, one should always include points like decomposing returns, validating drivers, and comparing with benchmarks. Scenario. Two valuation approaches give materially different results. How do you reconcile them? Sample answer. I compare assumptions, discount rates, and model methodologies. I recalculate using aligned inputs to remove noise from the comparison. If differences persist, I analyze which model better reflects market reality and document why. Some assets legitimately require multiple valuation lenses. While answering the above question, one should always include points like aligning assumptions, running reconciliations, and documenting rationale. How do you evaluate tax impact of cross-border transactions in a global investment setup? Sample answer. I analyze withholding tax rules, treaty benefits, and transfer pricing implications. I check whether gains or income streams trigger tax obligations in specific jurisdictions. I also review compliance with reporting frameworks like FATCA or CRS. Global tax requires precise analysis. While answering the above question, one should always include points like reviewing treaties, checking withholding rules, and assessing reporting requirements. What steps would you take to ensure strong data governance in a quantitative research environment? Sample answer. I assess data lineage, version control, access rights, and documentation quality. I check whether datasets are validated before use in models and whether changes are logged. Strong governance prevents incorrect trading signals. While answering the above question, one should always include points like reviewing data lineage, checking access, and validating quality controls. This scenario. You identify signs of overfitting in a predictive model. How would you address it? Sample answer. I run out of sample tests, cross-validation, and stress periods to see whether performance sustains. I simplify the feature set and remove noise variables. If needed, I retrain the model with stricter regularization. Overfitting is dangerous because it fails in real markets. While answering the above question, one should always include points like using out-of-sample tests, simplifying inputs, and applying regularization. How do you audit trading books for compliance with internal risk limits? Sample answer. I compare actual exposures with approved limits for position size, VAR, Greeks, and stop-loss thresholds. I test whether limit breaches were flagged and escalated timely. I review any manual overrides. Limit compliance reflects discipline in trading behavior. While answering the above question, one should always include points like checking exposures versus limits, reviewing breaches, and analyzing override logs. What procedures do you perform to validate Treasury operations, cash flows, and liquidity positions? Sample answer. I reconcile cash balances with custodial statements, verify collateral movements, and review short-term funding arrangements. I check liquidity buffers against regulatory and internal thresholds. Treasury accuracy is fundamental for daily trading. While answering the above question, one should always include points like reconciling cash, validating collateral, and reviewing liquidity buffers. End. Scenario. You notice a sudden spike in collateral calls. What investigations would you perform? Sample answer. I check whether market movements triggered margin increases. Then, I verify whether positions were misvalued or if counterparties updated their risk parameters. I reconcile collateral postings with agreements to ensure accuracy. Unexpected spikes must be traced quickly. While answering the above question, one should always include points like analyzing market triggers, checking valuations, and reconciling collateral terms. How do you evaluate compensation and carry calculations for fund managers and investment teams? Sample answer. I verify fee structures, hurdle rates, high water marks, and profit-sharing rules. I recalculate performance metrics and compare with fund documents. I ensure no double counting or misallocation. Carry calculations must be transparent and exact. While answering the above question, one should always include points like verifying formulas, testing metrics, and checking allocation accuracy. What steps do you take to review fund NAV calculations for accuracy? Sample answer. I verify pricing of all holdings, check corporate actions, and ensure valuation timing aligns with policy. I test accruals, expenses, and FX translations. NAV calculations must reflect fair value with no stale inputs. While answering the above question, one should always include points like checking instrument pricing, validating accruals, and reviewing translations. Scenario: an investor questions the fund's performance calculation. How do you justify it? Sample answer: I walk them through the methodology, explaining time-weighted or money-weighted returns. I reconcile returns with underlying NAV movements. I provide supporting schedules to show accuracy. Transparency builds trust with investors. While answering the above question, one should always include points like explaining methodology, reconciling NAV changes, and providing evidence. How do you assess cybersecurity risks in a technology-intensive investment firm? Sample answer: I review access control, network security, encryption policies, and incident logs. I test whether sensitive trading models and data are adequately protected. I evaluate third-party risks as well. Cyber breaches can cause financial and reputational loss. While answering the above question, one should always include points like reviewing access, checking encryption, and analyzing incident reports. What procedures would you follow to audit private equity or venture investments? Sample answer: I review valuation techniques such as DCF, comparable multiples, or recent funding rounds. I check legal agreements, cap tables, and investor rights. I validate impairment indicators and test fair value adjustments. PE investments need careful judgment. While answering the above question, one should always include points like validating valuation methods, reviewing legal documents, and assessing impairment. Scenario: a portfolio company shows drastically reduced earnings. How would you evaluate impairment? Sample answer: I review cash flow forecasts, market conditions, and recent performance metrics. I compare book value with recoverable value using value in use or fair value. I evaluate whether decline is temporary or structural. Impairment decisions rely on forward-looking analysis. While answering the above question, one should always include points like analyzing forecasts, testing recoverable value, and assessing long-term viability. How do you analyze the impact of macroeconomic factors on investment strategy? Sample answer: I assess interest rate trends, inflation expectations, currency movements, and geopolitical risks. I analyze how these factors influence asset classes differently. I link macro signals to portfolio positioning to ensure alignment with strategy. Macro awareness prevents blind spot risk. While answering the above question, one should always include points like evaluating macro indicators, linking them to assets, and assessing portfolio impact. Thank you for watching, and if you liked our video, kindly press the like button and leave us a comment. This will help us reach a wider audience.